Hello everyone, good morning and welcome to today's morning report on Monday the 9th of March with me, Rich Perry, market analyst at Handtech Markets. It's interesting the moves that we're seeing today because there's not a great deal of economic data that we've got to look forward to today, but we're still riding on the legacy of this payrolls report that we had on Friday. Sharp moves to the downside in equity markets. And that's continued today, but there is sort of a dichotomy with the currency markets because you had sharp moves or sharp strengthening of the dollar that's just unwinding slightly today. On Friday we had a big breakout on the dollar to new multi-year high levels. This is on the dollar index, sharp move there, but actually if you measure the distance or the range trade here that we had for the last few weeks and project that higher, that actually comes in at 97.70. So that target today has been achieved, 97.78. So that actually sort of suggests that perhaps the near-term move stronger on the dollar has been achieved and hit, and maybe there's going to be a recalibration of what the market's going to do next, which is sort of fitting in with a slightly stronger euro today, bouncing from above the 108.20 mark. And also cable bouncing from above 1.5 big figure. So big bounce there on the dollar, but not so much on the equity markets. There is a slight concern now because the strong payrolls report we had on Friday suggests now, or certainly will lead to speculation now, that there's going to be an earlier rate hike. People talking about June. I have my reservations about that. I still think it's going to be later on in Q3, maybe even Q4 this year, before we see a rate hike. But still, equity markets are worried about this. They're coming off. There was a sharp downside on Friday. Wall Street closing sharply down 1.4%. Now, an equity market that's just seen a strong payrolls report shouldn't be falling 1.4%. So that would suggest that the market is quite worried about this. I've got the VIX chart up here. It showed quite a significant move to the upside on Friday, certainly suggesting a turnaround going on in the VIX index. And normally, as we've been seeing over the past few months, when the VIX is going up, equity markets are generally falling. So bear that one in mind. As I said, yes, no real economic data due today. So we're trading just on the back of this legacy of this payrolls, and markets still reacting at the moment. And we'll see how it goes. But my chart of the day is the S&P 500 really, and the S&P 500 has broken down. On a near-term basis, it's completed this very sort of near-term head and shoulders top pattern that broke below the 2085 support, and that actually gives us a downside target of around 2050. But I think that low at 2042 could come under pressure. And look at these momentum indicators rolling over. RSI rolling over in decline now. MACD lines crossed over on a bearish cross. Stochastics confirming a sell signal as well. So there is certainly some room in this to the downside. And you look at these selling phases that we saw in December and January, all forming support around the 144-day moving average. Very interesting. And that 144-day moving average comes in around 2019 at the moment. So there is certainly room for a correction in these markets, and it looks like at the moment we may be seeing one. This is that head and shoulders top on the hourly chart. You see that pattern far clearer on that hourly chart, and that neckline now comes the resistance. So 2085 is the resistance, and that reaction high there, 2088 as well. In terms of the supports, you'd be talking about the 2058 reaction low that we had on the 11th, and also this fairly reasonably key reaction low that we saw 2042 that I talked about on that daily chart. But certainly looks like the S&P 500 has rolled over, and it could well be now entering into a bit of a correction phase back towards that 144-day moving average possibly. So very interesting times that we've seen at the moment. And with that, I wish you good luck in your trading today, and I will speak to you later.